Airline companies spent all their money on stock buybacks and now they're begging for a bailout. Couple that with everything else going on and you just created the perfect storm. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. If you thought things were about to calm down, you are wrong. This storm's about to get worse. Yesterday, March 17th, Wall Street, more specifically Morgan Stanley and Goldman Sachs, declared that we were in recession territory. Then a couple hours later, the Federal Reserve came out and they said that they were going to add another $500 billion into the economy to prevent banks from running out of money. That's in addition to the $1.5 trillion they announced over the weekend and the other $500 billion they announced on Monday. And then not too long after that, the Fed announced that they were going to use their emergency powers to start lending money directly to businesses, not to banks, but to businesses to provide them with emergency short-term funds so they don't go out of business. Wow. That's why today I'm going to be talking about the 5 different factors that are coming together to create a perfect storm. So make sure you watch this video until the end because you're going to be surprised by what you see. But before we get into that, hit that thumbs up button below and subscribe to the Minority Mindset YouTube channel. That way you don't miss our daily financial education videos every single week. And hit that little notification bell too. That way YouTube actually lets you know when our new videos are released. First, our greedy business decisions. For the better part of the last decade, big businesses had everything given to them on a silver platter. They had huge profits because people were spending money hand over fist. They had low tax rates with huge tax breaks. And on top of that, money was cheap. They could pretty much borrow money for free. These 3 things put together should set a business up for success so they can survive a small downturn, but some businesses got greedy. Every business has 2 parts. You have the owners of the business and then you have the employees that work in the business. If you go out and you buy 1 share of the McDonald's stock on the stock market, you become one of the owners or shareholders of the business. The employees of McDonald's are the people that are flipping the burgers and collecting the cash. Ideally, a good business will have both owners and employees together. This way, when employees work hard and they make the company win, then everybody wins together because the employees also are owners of the company. When a company has extra money at the end of the year, there's a few things that they can do with that extra cash. They can use that money and save it for emergencies. They can use that money to invest into their own business by hiring more employees and creating more divisions and investing in their company. Or they can use that money to give it back to their owners as a reward for owning a profitable company. A good business needs to do all 3. You need to save for emergencies because you never know when a new virus is going to come out of nowhere. You need to be investing in your employees and your business so you keep growing. And if you own a good company, your owners should be rewarded. It is a problem, in my opinion, when a business says, screw saving for emergencies, screw investing in our employees and our company, let's just make our owners rich. And this recent stock market crash has brought some very scary details to light. Airline companies are bleeding cash. Not just because no one's flying, but because some airline companies got greedy and they spent all their money making their owners rich, and now they have no money left to protect themselves. A recent article by Bloomberg showed us that airlines spent 96% of their free cash flow or extra cash on share buybacks. Let me say that again. Airlines spent 96% of all of their extra cash to buy back their shares, to make their owners rich, so they can make their company look more valuable on paper, and now they have no money left to protect them during this crash, and now they're going to Congress begging them to have you, taxpayers, bail them out. If that wasn't enough, take a look at this. American Airlines actually had negative cash flow to fund their share buybacks. That means they went out and they were borrowing money to buy back shares to make their company look more valuable. And this greed is now biting the airlines in the gas tank. Or it'll be us taxpayers who have to pay the price for their greed. Now, to be fair, not every airline company was like this. Delta and Alaska Airlines were the 2 American companies listed on the list to spend less money on buybacks than the average company in the S&P 500, and that's significantly less than the average airline company. And Delta CEO also announced that he's cutting his salary for the next 6 months to help fight through this crisis. The second issue is the oil crisis. Oil companies in the US have been struggling for years because people have been pushing for renewable energy, but things just got 10 times worse. When this whole pandemic started, the demand for oil dropped like a rock sinking in oil. China is one of the biggest users and buyers of oil, and once all this craziness started, they had to literally turn away oil tankers because all their factories and businesses are shut down, and so right now they don't need any oil. That's when Saudi Arabia and Russia, two of the biggest producers of oil, had a meeting to discuss cutting the production of oil, because if people aren't buying oil, you don't need to keep producing more of it. At some point during the meeting, Saudi Arabia got triggered and they announced that they weren't gonna cut production of oil, and instead they were actually going to massively increase the production of oil, and then they were going to sell their oil at a huge discount. Think of it this way. You're driving around and you see your gas tank turn to E, and now you have two gas stations right next to each other selling gas. One of them is selling gas for $2 a gallon and the other is selling gas for $1 a gallon. Who are you gonna go to? The one with better coffee? No. You're probably gonna go to the one with cheaper gas, especially if the price is significantly cheaper. This created an oil price war, which was the second punch to our economy because apparently this pandemic wasn't enough. Oil prices tanked, which is good news for you and me because now it's cheaper for us to pump gas in our car, even though I have nowhere to go because everything is shut down. But it's not so good news for oil companies because oil is selling for below cost. So every time these companies sell a barrel of oil, they are losing money. These companies were already struggling to begin with, and you don't need to be a financial genius to understand that it's very hard to stay in business when you're bleeding money. That's why some experts are predicting that many oil companies might start filing bankruptcy in the next 12 to 18 months. Third, too much spending. A year ago, people thought nothing bad could ever happen to our economy, and the media was reporting things saying this bull market can't be stopped. Well, what goes up must come down, and you would hope that when things are up, people use their money the right way, this way they can protect themselves when things do come down. But the numbers tell me something else. 6 out of 10 Americans do not have $1,000 saved up to cover an emergency without going into debt. And right now, 10 out of 10 Americans are in emergency. That's bad news, but it's even worse news when you couple it with the fact that Americans have a record high amount of credit card debt. We've already way past our 2008 levels. Businesses are shut down, which means people aren't working, which means people aren't getting paid, which means people don't have the money to make their regular payments, which means bills and credit cards are gonna start piling up. There are now talks of the government sending out checks to every American to help them in this crisis, but there's really only so much they can and will do. That's why financial education is so important, so you can take care of your finances when things are good and bad. We even have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, and you can get that by clicking the link up here or by clicking the link in the description below. Fourth, the Federal Reserve Bank, or the Fed's monetary policy. When the economy slows down, the Fed cuts interest rates to stimulate the economy because that makes borrowing money cheaper. Like when mortgage rates are low, more people are likely to buy a home. When the economy is booming and everything is growing, the Fed raises interest rates to make sure that things don't grow too big too fast. Well, in 2006, interest rates were at 5.25%. And then when the financial meltdown happened in 2008, interest rates were slashed all the way down to 0%. This meant that the Federal Reserve had a buffer of 5.25% to stimulate the economy by making interest rates smaller and borrowing cheaper. In 2018, interest rates went up all the way to 2.5%. Nowhere near as high as where we were in 2006, but the economy was booming. And then in 2019, during a very strong economy, the Fed decided to cut interest rates. Why? Because they wanted businesses to grow even faster. Now, here in 2020, things slowed down for a month and interest rates are already slashed all the way down to 0%. That means the Fed has very little room to stimulate the economy. I mean, we're already at 0. Plus, we haven't even fully entered a recession yet. That means if the Fed wants to stimulate the economy now, they're gonna have to be creative. They might have to fund huge bailouts. They might have to fund big checks going out to every American. They might have to fund huge quantitative easing checks. And they might have to bring out negative interest rates. If all this wasn't enough, we're given the last piece to the perfect storm, the straw that broke the camel's back, the needle that popped the balloon. Number 5, out of nowhere came a virus which made people scared to spend and it forced businesses to shut down. Again, if people and our business and the economy was truly strong, we'd be ready to handle a few months of setback, but we're clearly not. That's why we've been saying for years that you need to have 6 months worth of expenses saved in an emergency fund, because if bad things were to happen, you are protected. But now because of this virus, people are not spending money, they're staying at home, they're not traveling, they're not going out to restaurants, and businesses aren't making any money. These changes only started a few weeks ago in America, and we've already seen businesses talk about layoffs, people are already struggling to pay their bills, and we've seen trillions of emergency dollars injected into our economy to help keep banks alive. The question now is, how bad can it get? And it depends on how well we can contain the virus and how well we can contain the economy. If the efforts by the government and the Fed work, you are going to see the stock market rebound like a yo-yo. If their physical and financial efforts don't work, then things are going to get much worse. Now, before I end this video, I want to hear from you. Did I miss anything? What are the other factors that led to this perfect storm? Let me know in the comments below. I try to read every comment that we get, and I'm really interested to hear what your thoughts are. Thank you for watching. If you enjoyed this video, share it with one friend. And if you're wondering how you can be investing your money during a time like this, I already made a video on it and you can watch it on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.